Good afternoon, good evening, good morning, everyone. We've got people joining us from all around the world, which is fantastic. People looking to returning to the UK. My name is Emily Despois. I'm the Chief Marketing Officer for Fine & Country, and I will be the host for this webinar. I am joined by a fantastic panel of experts, from mortgage and tax specialists to currency and property. We will try to cover as many of your questions as possible. We have received a lot of questions, so if there are questions that we haven't answered, we will make sure that all your questions are going to the specialist who will get in touch with you outside of this webinar. There is also a chat that is available to you. If there are questions that suddenly pop into your head and you're thinking, oh, I forgot about asking about that question, please make sure that you're putting your question into the chat. I will have a look from time to time and see if we can answer some of those questions as well. So without further ado, let's first introduce each of our panel experts and get into the questions thereafter. Let's have a look at who I have on my right on the screen. John, do you want to start?
Hello everyone, my name is Jonathan Handford and I'm the Interim Managing Director for Fine & Country. We're an estate agent that concentrates on what would be regarded as the upper quartile of the housing market, so the top 25%. We've got quite a strong force within the UK, but we also have a lot of international offices as well, dotted all over the world. So again, we're perfectly placed to be able to assist you in both selling and also buying a property. So yeah, I guess I'm your resident estate agent expert for this webinar.
Fantastic, thank you, John. Matt, over to you.
Excellent. Hello everyone. So my name is Matthew.mcclure, one of the executive dealers here at Lumon Pay. So we're a currency exchange brokerage based out of Farringdon in London. Been around for 25 years, the company, with over 200 people in the company now and 10 offices worldwide. I've been here for 5 years on the dealing team, assisting with clients moving large transfers internationally for property purchases, property sales, international investment. I've been here through the COVID periods, the beginning of the first Trump campaign, and well, the end of the first Trump campaign, and the start of another, and as well as the Liz Truss debacle as well. So plenty of experience in volatile markets. But yeah, aim here really is to offer more competitive rates than you would get with a typical bank, and ultimately help our clients save money.
Thank you, Matt. Chris, over to you.
Hello everyone, I'm Chris Lloyd, partner at Enness Global. I've been with the company for 10 years and we are your absolute go-to for specialist mortgage lending. Most of our clients are internationally based. We've got offices overseas and we are just prime positioned to be able to assist clients that have usually spoke to the high street banks before, or perhaps even another mortgage broker, and they've come up with some issues. So we're good at putting complex lending structures in place to assist our clients with the best mortgage requirements, which I'll come on to tell you about. But yeah, that's me in a nutshell.
Thank you very much. Jonathan.
Hello everyone, I'm Jonathan Hopper. I'm CEO of Garrington Property Finders, which is the largest independent buying agency in the UK, with coverage from the Scottish Highlands all the way down to Cornwall and pretty much everywhere between. We work exclusively for buyers and we help people save time and money in finding their perfect property.
Thank you very much. And then last but not least, unfortunately, someone that you can't see but will be extremely valuable to this webinar is Nick. Nick, do you want to introduce yourself?
Yes, thank you. Yeah, you've dodged a bullet with my camera not working. My name is Nick Pasco. I'm a senior partner at Blevins in the UK. As a business, we're based from Cyprus and Malta. I worked in France with the company and did my own return about 8 years ago. We have about 4,000 clients, and of whom 50 to 60 a year work their way back to the UK. So we advise them on the tax and the wealth management issues associated with that.
Fantastic. Thank you very much, Nick. Nick, if that's okay, actually, we will start the questions with you, because I think even before someone look at a property in the UK, there are a lot of things to take into consideration. Tax is obviously something that is on everybody's mind. So if I may, I will start with tax questions with you. The first one being, is there a key tax consideration to ensure we have dealt with before returning to the UK?
Yeah, that's a good one. I'd say the go-to, the first one we'd look at would be whether somebody can take advantage of a nil or low capital gains tax where they're living, so lower than the UK. So typically somebody living in Dubai, like Singapore or Cyprus or Belgium, a bit more randomly. But if somebody's lives somewhere, lower capital gains tax to sell and crystallise their gains, ideally in the UK tax year before coming back. So if somebody was about to land now, and hopefully we've been speaking to them for 6 or 9 months or so, they would have sold crystallized gains before before the end of March this year. But that's the first one that I would suggest we look at.
Okay. Any others that you think needs to be looked at, or capital gain tax is the main one?
To be honest, capital gains tax is the main tax that we're likely to take action on. I mean, there's a lot to discuss about coming back, and especially with it might come up as questions as we've got long-term things coming to play now. But that's the one that we're most likely to be advising people to do something material about before actually coming back.
Okay, fantastic. And so the next question really is, at what stage should we be discussing our wealth with an advisor in our plan to move back or buying in the UK?
Sometimes people start a little bit too soon, and then we've got there's a budget every year. Change initial discussions. I would suggest 12 months, or somewhere between 6 and 12 months before, and again ideally in the UK tax year before coming back, just so that we've got the opportunity to take advantage of any tax breaks there. Advice takes, I'd suggest, about 3 months from beginning to end, from initial conversations to be able to deliver it. So yeah, somewhere in that sort of time scale, 12 months and beyond, and certainly where property is involved. I think in most countries, most people advise I think 3 months is a reasonable time scale from accepting an offer to completion, for example, and that's often quite good. That's the time at which it becomes real for people that have to sell a property before coming back to the UK.
And next question for you. We have read about the new long-term residency rules and the abolition of non-dom rules. Would you please briefly explain what this means to us?
Sure. The previous government committed to make plans to change and even end non-dom rules, which are really applicable to people that weren't originally UK nationals, and the current government's taken with it and taken the baton and run with it. And so actually there's a bit of an opportunity there. So what we now have is clarity. So anyone that has been out of the UK for more than 10 years, on return to the UK, their overseas assets not physically back to the UK, outside of the net for UK inheritance tax. So there's actually quite a good opportunity that's come up for lots of people that wasn't there before. So a UK national, doesn't matter on nationality more, it is all about how long you have been outside of the UK. So you're deemed to be a long-term resident once you've been in for more than 10 out of 20 years. So that's the big change that hasn't been discussed that much, and we think an opportunity for returners to the UK that have been out for more than 10 years.
Okay, I think I don't know about you guys, I think I lost you a tiny bit. Just to recap then, if the person has a property outside of the UK and has been living outside of the UK for more than 10 years, then that property wouldn't be subject to inheritance tax. Am I correct?
Yeah, it's any assets. So just to be clear, not just an actual property. So assets that are outside of the UK. So yeah, the previous question you studied, it's been away for 14 years, comes back to the UK for their first 10 years back in the UK. Non-UK assets are not subject to UK inheritance tax.
Okay. Thank you very much, Nick. So going from tax to mortgages, question for you, Chris. How difficult is it to raise a mortgage on a UK asset as a global resident?
Okay, so getting a mortgage for the first time in the UK, let's say, for example, and what we're seeing a lot of is US clients moving to the UK for the first time. That can be an absolute nightmare when you're looking to do it with let's say, a high street lender. Most standard lenders want you to have at least 2 to 3 years experience living in the UK, address history so they can credit score. They want you to have a bank account open already. And they also want you to have been earning in sterling for the last sort of 2 to 3 years, for example. So that's just really not the case for again, probably most of my client base. So where we're really able to add value is dealing with the specialist lenders and more so the private and investment banks. This is really good business in the sense that private banks and more specialist lenders are able to take a holistic approach to a client's wealth and earnings. So they're not concerned whether a client's been earning in, say, US dollars for the last 3 years and going to continue to do so moving forward. They can also often open up a bank account for the client to use while they're moving to the UK. And just taking a case that I recently assisted a client with, I had a private bank able to lend 85% loan to value against a client buying at 3 million. This worked really well for the client as well because it just meant they had to put in a much smaller deposit, not wanting to bring too many funds to the UK. This worked very well for the client. And again, the bank wasn't concerned regarding their ability to pay the mortgage because they had that income in the background, albeit in US dollars. So yeah, in answer to your question, it can be super challenging, but this is where at Enness we talk to more common sense approach banks and lenders, and again we can simplify that process and make it straightforward.
Thank you. I mean, something that I see in a lot of webinars is if you talk to the right people and to the specialists who specialize in international move, then suddenly everything is just made easier for you. So in principles, it can be very hard, but if you approaching the right company and the right people, then suddenly your life is much easier. So what is the process and how long does it take to understand the amount I can raise?
So again, I'm going to talk about what an advantage to using Enness is here as well. We are not a high volume mortgage broker. We're not interested in doing as many mortgages as we can. It's about understanding a client's circumstances and their requirements as well. We have a lot more time to ensure that the client's getting the most competitive mortgage. So what that means is from speaking with the client initially, once I've got the information I need following an initial fact find, I can put terms together for a client and let them know how much they can borrow, the interest rate, all the fees associated with that transaction, sometimes as quick as 24 hours. So we can give that comfort to a client pretty quickly. I think further on as well, we're then able to kind of speak to agents, and once they're negotiating on a property, we can sort of give further comfort that the funding's in place, obviously subject to formal underwriting and evaluation. So that process can happen quite quickly. And then following the client off getting their offer accepted on a property, we've had mortgage offers produced within sort of 2 to 3 weeks before, again subject to underwriting and surveyors availability. But it's a process that we can again simplify and just make happen quite quickly.
So 24 hours for someone to know approximately how much they can get, and then 2 to 3 weeks for them to have confirmation of the mortgage approval, mortgage in principle.
Yeah. Subject to you know, complexity, but as quick as 24 hours we can do it. We often say sort of 24 to 48 hours, just to allow for lenders to come back to us.
And can you share some example of the loan to value and volumes client are raising?
Yes, absolutely. Within the space, lending space, I guess up to $1 million, you can look at potentially obtaining sort of 90%, 95% loan to value, is probably more up to around the sort of 500k. Again, it depends on the strength of the client. Sometimes we can exceed those the sort of 90% loan to value up to $1 million, but it would really be down to the strength of the client. I think above $1 million, there's lenders that will still continue to do 90% loan to value. Again, it has to be a super strong client. Typically, it will be sort of around the 80 or 85% loan to value above $1 million that we're able to achieve. One case I think I should give a bit more colour around is one that I'm currently working on, which is a client looking to buy 11 million. I've managed to get an 80% loan to value mortgage formally approved, which is unheard of in the sort of high street bank and the standard lending space. And the reason we're able to do that is he's got a significant increase on his income for the last 3 years, and that's set to go up further. So we're doing what we call a low start mortgage, where he's going to pay full interest only as well for the first year, keeping those monthly payments down. And when he's built up more of an income and a cash reserve, he can then start bringing the balance down to 75% loan to value after in year 5. So that's an example of the sort of loan to values we're able to get to, certainly at the higher value property as well.
Good, thank you. I'm going to go a bit off piste, and hopefully the questions will be of interest to people listening, but these are questions that I haven't seen, but some people might think of, and that would probably be for a mix of Chris and John and Jonathan. And so would you advise someone to get a mortgage in principle even before looking for a property? Is it helpful to have a mortgage in principle?
Look, certainly on this, I think personally there is never a point that's too early to be speaking with a client, even if it's a lot of our clients are entrepreneurial. So I've been speaking to a client for even two years before they've got their offer accepted on a property. I think it's about letting them know exactly what a lender would be looking at in terms of income levels, particularly if they're self-employed, and sometimes it's putting a plan in place, even if it's not a now that they can do it, it's maybe in a year's time. It's putting that plan in place to show them what they will be required to show when it comes to the underwriting process. The last thing you want, especially from John's side, is that they go away, put their offer in on a property, get it accepted, and then the finance, it has not been confirmed, and they don't have an idea what they can borrow. So I think always speak to us as soon as you can, and then we can give you that idea. We can send out a sort of an indicative term sheet or a decision in principle to let you know potentially what's possible, again subject to underwriting. But I think it's always a conversation we should be having early on in the process.
Fantastic. Anything to add from the panel to that?
I dive in as the voice of the buyer, and you can be the voice of the seller, John. Absolutely concur with everything Chris has said. In the market, particularly if you're moving internationally, where there are so many moving parts to that jigsaw puzzle, having certainty of what you can lend when emotionally you've then got excited about a property is absolutely critical. And if I'm knocking on the likes of John's door as an agent, and I'm presenting our client as the best buyer in the market, they're going to want to do their due diligence and see that everything is organised and that this buyer is committed and ready to proceed, rather than just thinking about it and maybe got ideas ahead of actual reality. So from our point of view, it's something that we would absolutely do all day long, and completely concur with what Chris has said. But let's see what John says.
Thank you.
Yeah.
John?
Yeah, so a great perspective from the side of the buyer. From the side of the seller, why would you open up your home to somebody to come and do viewings and steal a couple of hours if they're not in a position to be able to proceed and they haven't got proof of funds? So agents are way more diligent than they used to be, and it's not just the agent's time that's wasted, it's the buyers. They're looking in the wrong part of the market. The sellers are working with the wrong people. I've seen buyers get their heart set on something and then realise that actually they can't get the mortgage. Or another polar opposite of that is they can actually afford to borrow way more than they originally anticipated, and they're just looking in the wrong part of the market. So, you know, in terms of good housekeeping, speak to someone like Chris and a mortgage advisor, get a decision in principle so that you're comfortable and you know what you can borrow. And then in the event that you do see something that you really like, you can spring into action quickly, because you might be in competition with another buyer, and if they have all of those things locked down and you haven't, they're going to be a nose ahead in the negotiation process, and they're more likely to secure the property. Because as a seller, whose interest are you going to take more seriously? Somebody that's been ratified as a buyer with their mortgage, or somebody that hasn't?
Mm-hmm. Thank you all. One other question, which I know is not on there, might be for Nick. This one, to be fair, is in a prior webinar we were told that, for example, in France, it's better, even if you're in a position, if you're a cash buyer and you can buy the property all in cash, it's actually beneficial from a tax perspective to have a mortgage in the country. What would you advise for the UK? Is it the case in the UK, or is actually being in a position of buying cash preferential?
I can't think of any big tax benefits from the UK point of view. People often do it in France. It's to do with wealth tax and to reduce the value of their assets in France. But no, nothing
in the UK.
Can I jump in? There is a common misconception from buyers that believe that having cash puts them in an advantageous position when negotiating. It's marginal in terms of the difference that it makes. If you've got a hefty deposit and a relatively low loan to value, then you're just as good as a cash buyer. I think sometimes that cash angle is used as leverage, and it's possibly not as a strong a negotiation tactic as people might think.
Interesting, thank you. So now over to Matt from a currency perspective, because that's great, you're getting your mortgage, but you're probably might be getting it in a different currency than the pound. So Matt, first question for you: why would someone speak to a currency broker over a bank?
Yeah, it's probably the most common question we get, because the normal thing would be to just use your bank, and people did that for years and years and years. But typically banks don't offer very competitive rates of exchange, so that's where we exist. And like I said, we've been around for 25 years now. We exchange close to £10 billion worth of currency every year through this dealing desk, which is about £30 million a day for you mathematicians. But yeah, it essentially allows us to buy at a more competitive rate of exchange. So we go to our providers and we essentially negotiate on your behalf for the rates that we can offer. And like I say, you should see a significant saving on that. You know, we do some mystery shopping to see what UK banks are charging, and you know, the average you would say is maybe £500 to £1,000 on a £50,000 transaction. So you think about larger volume of exchange, that can add up, you know, really quickly. And as well as that, it may even become more apparent when you're looking at the fluctuations in the currency markets as well. Sterling dollar is a huge talking point at the moment, of course, with everything that's been going on in the world. But it started the year at 121 and it reached 134. So that's a 10% change in the currency. So let's say £500,000, that's about $60,000 difference on your buying and selling level. So thinking of buying a 4-bedroom property or a 5-bedroom property, that could literally be the difference just there on the currency. So we're not here to, you know, give you advice. We're not legally allowed to do that, and you know, we can't tell you what's going to happen with the currency market, because quite frankly I don't know. But it's really here just so that you're getting more of making more of an informed decision on your currency, and that's what we're here to offer guidance on as well.
Thank you. So do you offer multi-currency accounts, as opening a UK bank account before having a property can be difficult?
Yeah, so we're what's called an e-money institution. So it means that you can hold funds with us and they're all safeguarded all protected under the safeguarding method. So we're regulated by the FCA in order to do so. So essentially, it's a free multi-currency account that you have, so you can hold and trade any major currency with us. And a lot of people will do that ahead of their completion. So you hold funds here completely free of charge for doing that, and you have a member of the dealing team like myself to essentially at your disposal to talk about any currency fluctuations or any contracts you'd like to enter into. But as soon as you are ready to exchange, we can make a same-day free transfer into the UK.
And how long can you hold that money for me?
Forever, if you'd like. So yeah, like I say, there's a difference between some brokerages out there. So you have an e-money institution and a payment service. A payment service can only hold your funds for a certain amount of time, so they're purely there just to offer an exchange from dollar to sterling, for example. But an e-money institution, you can hold funds here and you can enter into different kinds of contracts to hedge your bets a little bit. Let's say you're buying £1 million and you just want to do it in £100,000 chunks. You can do that. You can hold multiple different currencies here. So there's a lot more strategies and a lot more flexibility with an e-money institution.
Thank you. And with all that is happening at the moment in the currency market, many people are concerned that people's budget plans could be significantly impacted. How have recent events impacted the market, and what can you do to help navigate this?
Yes, I mean, I covered some of it already with the dollar sterling rate, and I mean, I'll address the elephant in the room, which is President Donald Trump. He's changed the landscape drastically for a lot of things in global markets. So, a lot of talk around tariffs and the implications of those on global trades, and specifically interest rates. Actually, I mean, interest rates are a huge driver in currency. Because if you think about it from an investment perspective, if you're thinking about investing in the pound, for example, but the central bank is looking at cutting interest, that's something that's not particularly seen as a positive thing. So you might look to invest your money elsewhere. So that's how it can reflect in the currency world. And I'm sure the other panelists can talk more about how that affects mortgages and the buying or the property market in the UK. But there is a saying in the currency world that the market moves on expectation just as much as fact. So a currency can gain or lose value just depending on what the market thinks will happen. And we have to try and predict and navigate that. So we do that in a lot of different ways. There's forecasts that we receive from, I think it's over 50 financial institutions and research teams that we share with our clients, just to kind of give them an idea of what's coming up and get a plan in place to execute their exchanges. And as I've touched on as well, there's several contract types. So for example, a limit order to say, well, I need £1 million at $1.2 million, for example. So you need a trading level of 1.2. So we'll set that into the markets and we'll book that exchange as soon as that rate becomes available. So you don't have to rush around doing it all yourself. You have this account here to do that. And it helps you understand your budget and put a target in place so we know what we're aiming for. And there's another option if you don't have access to your dollar funds for whatever reason, if you're waiting on them being drawn down or they're in a long interest account, for example, you have what's called a forward contract where you can purchase your currency. So let's say you have a property that you're looking at purchasing in the next 3 to 6 months, and you know kind of how much it will cost, let's say £500,000. We can purchase £500,000 worth of currency, but you don't need to pay for the dollars until a later date. So you can hold the dollars in an interest-bearing account or keep it where it is for now, but you can still secure your currency. So it's all kind of designed just to give our clients more peace of mind around how many pounds they can achieve and get a realistic budget. And that's, to protect in case there's any adverse movement in the rate before you complete on the property.
Yeah, so let's say I'm buying in euro into the UK and suddenly the euro falls drastically and a property that would have been maybe 500,000 euro for me is now 600,000 euros because of the movement in currency. It's something that you can help me with if I go to you and maybe lock my currency at a certain level so that I know there is no nasty surprises for me in the future.
Exactly. And like I say, you could do that at any point. So I know obviously the UK property market, things can fall through. But at least if you are securing your currency when the rate is at favourable points, or just a level that you're happy with, if you are working to a budget in euros and you can't afford for that to drop any lower, you can secure it, have that peace of mind, so you don't have to worry about what Trump says next.
Okay, yeah, I've heard that you have been sleeping in the office, all of you, for the past couple of months. So you've been fed and everything. You've got beds under the desk, which is fantastic. But it's what I like with Lumon is peace of mind, basically. With the currency, people know I'm adverse to risk, so I like this option personally. So that's great. So John, over to you. So I know about taxes, I know about mortgage, and I know about currency. Now I'm ready to talk to an estate agent and look for properties. And then Jonathan, I'll go to you afterwards to discuss exactly what a buying agent could do for me. Any trends that you are seeing currently in the UK property market?
Yeah, our market is nowhere near as sexy as a currency market that's subject to really significant fluctuations. Ours, if you pan out and look at it, you'll see a steady, slow growth in prices over a large course of time, and we're not anticipating that that's going to change. In terms of some of the patterns for specifically people moving back to the UK, where are they buying? So interestingly, it quite often it's where their roots are. So people are retreating back to where their family connections are. They might have aging parents, or they might have connections with business or friends or family or something along those lines. Because the cost of property in the UK is still quite high in comparison to other places in the world, we're finding that London maybe isn't the target destination, because obviously you need to get quite a bit of bang for your buck. One of the trends that we've seen, I can't remember who it was that referenced COVID, I think it was probably Chris, that sparked a change in people's living circumstances. There was something that we call digital nomads, where people can log onto their computer and work pretty much from wherever they want to in the world. So people were moving to different places dotted around in Europe and elsewhere. They might have an expectation now of living by the coast or by the sea. Therefore, when they move back to the UK, that's something that they're going to gravitate towards. So with that, your coastal retreats, the Devons, the excuse me, the Cornwalls, the Norfolks, they're always going to be an appeal and a target location. But that being said, the traditional places, the Cotswolds, Oxfordshire, Surrey and Bath, they're also very popular. North of the border, places like Edinburgh, again, are popular. One of the chaps at Lumon I was talking to only the other week, they had a family moving from America to Edinburgh, and again, that's quite a popular target location at the minute. So yeah, in terms of any trends, there isn't a significant a change or shift in prices. We have just seen a spike in transactions because as a result of the stamp duty deadline, which was at the start of the year. There was a surge of people that were looking to take advantage of that, and if you were in a chain, chances are the person somebody in the chain would be trying to rush through to take advantage of that. We are seeing a little bit of an impact of stamp duty costs, specifically above 925,000. It'd be interesting to get Jonathan's views on this. Many years ago, there was a bit of a Bermuda Triangle in the housing market above 250 to 280 when stamp duty jumped from 1% to 3%. And as a result, buyers were very reluctant to buy something at 275 because of the extra commitment for stamp duty. We've now got that above 925,000 because stamp duty jumps from 5% to 10%. So if you're looking to buy a property and you've got a budget of £1 million, your stamp duty costs, your entry costs are going to be £100,000. If you cap your budget at 900,000, your stamp duty all of a sudden is 45,000, and that's quite a considerable saving. So we are seeing a little bit of pushback. And interestingly, proportionally, if you look at a property that's 4 or 5 million, then stamp duty is only 12%, so it's only an extra 2%. So it's quite a significant shift from just below to above 925.
Thank you. So going from there, and I think you touched upon it a little bit about locations and maybe property types that are more in demand at the moment.
Yeah, so people that have maybe moved overseas have done so from a lifestyle perspective. So they've done it to take advantage of, again, coastal living or a more relaxed lifestyle. It might be that they're targeting recreational things. They still want that. So either close access to it, country clubs, etc., tennis clubs, golf clubs, places where people can actually spend time from a recreation perspective. Or again, if they're wealthy enough, they might want those facilities within the property itself. So again, that's another thing that we're noticing. But like I said, the location, people go back to their roots. If you've got aging parents, one of the reasons why you're moving back might be to be closer to them. So having that close proximity is going to be more important than anything. So going back to the roots is the priority.
And do you see any properties that are in demand at the moment, on trend?
Nothing specifically. There was a great example from a colleague, Sean, who sold a property last weekend. It had 45 viewings and 9 offers. So that's 44 people that have missed out on that one property and are still looking to buy. So the properties that are priced sensibly are attracting a lot of interest, and you tend to be in competition with buyers. Conversely, there are properties that have been on the market for 2 years, but you've got a more stoic vendor that's committed to a price and they're refusing to budge and unfortunately sitting tight. So yeah, there is still quite a bit of activity out there, but in terms of the different types and styles, it really is an eclectic mix. The very top of the market, what we would call the super prime, the 1%, that is struggling a little bit because again, people are a little bit more cautious. There are still examples of properties selling, but buyers in that part of the market, they might have felt the pinch a little bit from some of the economic turbulence that we've had and some of the political and geopolitical changes that we've seen in recent years, and they're maybe a little bit more cautious.
And very briefly, is there any advice you would give to someone who is starting their plans on returning to the UK?
So you get your finances in place before you start thinking about getting out and actively looking. Understanding the tax implications and putting a proper budget in place to understand the costs of the move for both exit and entry, moving back into the UK. I'm working with someone like Jonathan and their team in terms of giving a specific profile for a type and style of property, because Jonathan will always work with the best local agents to partner to try and find suitable properties. So but yeah, I think getting the finances and the tax and understanding your ability to be able to do the move is more important to do so before you're emotionally connected to a property, and then for whatever reason realizing that actually it's out of reach, because again, it's just frustrating and a waste of everyone's time.
Thank you. So over to Jonathan. Great introduction to Jonathan. Jonathan, what could Garrington do that a buyer couldn't do themselves?
We do lots, and it obviously depends on what somebody's doing, where they're trying to buy and their background. But one of the strange quirks of the UK market compared to many international markets is that most buyers proceed unrepresented and have to support themselves with the search and all of the decision process, whereas most international markets, you tend to find that realtors in the US or real estate agents in other parts of the world, there is a buyer, there's an agent representing the buyer, and there is an agent representing the seller. And in other markets, they share commissions. In the UK, we're slightly different. A buying agent in the UK solely works for the buyer. What we'll do, particularly for an international client, is bring a level of clarity and confidence to the entire search process. So right from the planning stage, in terms of the art of what's possible, and overlaying that with knowledge, market conditions, talking to somebody like Chris in terms of what's possible on finance, locking in terms of FX, and then a collective picture, and then somebody like Nick in terms of the tax position. All those conversations need to take place first. The property then becomes maybe the exciting bit in terms of going out and looking at things, not saying the others are not exciting, but then the journey of actually going forward with a clear strategy, with a level of confidence that you know what you want to do is actually achievable, and then going into the market. And as a buying agent, our clients are seen as more serious buyers. They're represented. Sales agents know that we only work with committed, organised clients, and from their point of view, it does enhance our sort of status within the market. The other thing that we can do briefly to touch on is the fact that depends on the price bracket, but certainly there are certain price points in the UK where there's a significant amount of property that is sold off market rather than fully available. So whilst most people head to portals and form an opinion of what the market can offer, actually there's a lot of things that are privately available that somebody's never going to see unless they've got access to somebody like ourselves.
Yeah, true. We deal with a lot of off-market properties, which it's people such as you that just have a buyer and go, we know about those properties, and if you're interested. So and so what would be a process of appointing a buying agent?
It all starts with normally a Zoom call if it's an international client, and a chance for them to get to know us and for us to get to know them, to listen and understand to what stage they're on their journey so far, and for us to get a real deep understanding of their brief and what the vision is of the life that they're looking to try and create for themselves. Once we've done that and we've been formally engaged, we then go into the market and we're acting as their eyes and ears. For a lot of our clients, they want us to filter options before they'll jump on a plane. For some clients, they don't even want to jump on a plane. They want to buy sight unseen. That's more the rare rather than the norm, though. A lot of what we do involves sort of digital viewings. We have a sort of playlist system where a client is allocated their own video platform where everything that we go and look at that's potentially suitable is shown to them. And then we're all the way there right through the process. So filtering options, viewing those properties, negotiation. Obviously, John and his team, we know very well, and they're there to get the top price for their client, and we're there to get the best price for ours. And there's a healthy level of respect between us, so that we both get the job done well. But we'll negotiate and then equally iron out the creases that typically occur on a transaction. There'll be things from a legal perspective, there'll be things from a finance point of view. Deals go through a lot easier and in a much calmer fashion if there's clear communication between all the parties. We act as that central hub to make sure that that communication and problems that could become problems are spotted before they even become an issue. So it's the entire process from start to finish.
Fantastic. I think if you're abroad and you're far away, it's always nice to know that there is someone on the ground who know what they're doing, dealing with something that's so important in the purchase of a property, for sure. So what is the difference between a buying agent and a relocating agent?
So relocation agents tend to come up quite a lot with anybody moving internationally, but they tend to be more skewed towards the corporate market. And they tend to be sort of short-term solutions, maybe employees that are being moved over to the UK for a year or 2 years on a project. And it tends to be more logistical about how to get people from one side of a continent to another and all their possessions and family for a period of time. What we do is far more complex and strategic in nature. There's somebody's life plan, there's somebody's tax plan, there's somebody's wealth plan that all gets overlaid with then the property plan. And majority of what we do is working with buyers rather than renters. We have quite a few clients that maybe will rent to start with FIG regime and knowing when the button is being pressed on that. There's sometimes tactical reasons why people want to rent before buying, but it's different in nature, albeit we are moving people from one part of the world to the other.
Thank you very much. So going on to a few questions that that came. One that I think probably, and I highlighted it, which is around stamp duty. And if I can find it again, see, sometimes I highlight thing and I lose things. Well, but whilst I look for it, I'm not sure if anyone on the call can answer this one, but I just thought that was an interesting one. Are there any tax implications of taking furniture and personal belongings back to the UK? Can anyone answer this one? Maybe Nick or anyone? We'll come back to you then on this one. I just thought that was a quirky, interesting one to answer. I think Nick answered this one, but just as a recap, Nick, if you can help, what's the optimal time to move my fiscal residency back to the UK? Nick, still there?
There isn't a.
Yeah.
Yeah, I'm still here. There isn't really a better time of year. I would just for the individual that there's some tax planning to do, like Chris, like that, then it would be in a new tax year. If that makes sense. So yeah, well, we've done some tax planning, so after April the 6th. But for most people, it doesn't. You'll become resident. Really the day that you arrive back with the intention of remaining.
Okay. And I think
Emily,
I found it. Okay.
Emily, I've just found the answer to your question, bringing furniture back into the UK.
Thank you.
Transferring residence relief. The TOR scheme allows individuals moving their normal place of residence to the UK to import personal belongings without incurring import duties and VAT, provided certain conditions are met. And the eligibility criteria is residency. You must have lived outside the UK for at least 12 consecutive months prior to your move. The items must have been owned and used by you for at least 6 months before your move. And import timing, you should import the goods within 12 months of your arrival in the UK. Things not covered by TOR relief: alcohol and tobacco products, commercial vehicles and equipment, and items intended for sale. So goods that will be sold or transferred to another person within 12 months are excluded. There you go.
Thank you very much. The interesting one, I think, is it has to be used by you for 6 months. I'm not sure how you can prove that you have been using it for 6 months. You can prove that when you bought it, but that you have been personally using it is an interesting one. But okay, thank you very much. So I found the one on stamp duty. If we buy in the UK before in this instance in Portugal, but I guess that could be anywhere, before our Portugal house sells, can the UK property be our main residence for stamp duty purposes? See the look of confusion on your faces.
Ask the question again, sorry. So if you are buying...
If you buy a property in the UK, you bought that property in the UK, you still have a property for sale abroad, so Portugal, France, Spain. Can the UK property be your main residence for stamp duty purposes?
No, don't think it can. It's if you've got a second property globally. So it doesn't matter where it is. There's a window where there's a rebate available if you are selling that. So that is your main residence and you're transferring your main residence in the country. But if you own another property anywhere in the world, you will be subjected to the second home surcharge, which is now 5%.
And is it 2 years? I can't remember if it's 2 or 3 years to then sell the second property.
I think it was 3, but it's been reduced.
Okay. There you go.
Thank you very much. I'm not sure someone will be able to answer this one because I'm not sure anyone is specialist in that area. How easy, difficult is it for EU passport holders to migrate to the UK? Anyone will know how to answer this one?
Not an immigration expert, but I know that many clients have done so.
No, it's not quite our field, but I think it's not the same thing with visas which you have for overseas. It's not. It's so I'd say it's easier. Haven't had any great problems with people coming back, but we don't. The UK doesn't have that same setup of needing to hit minimum income criteria, etc., which you have in certain countries, and it's hard or an active visa. So the short answer is probably it's quite easy. We'll go with that.
Okay, good. And one maybe for you, Nick. So everybody's interested in taxes. Is how do I avoid the heavy taxation in the UK? If there's such things, that if we can all know, that would be fantastic.
There's an obvious answer, but it doesn't involve the UK. Yeah. There's quite a lot. The UK has some pretty decent allowances. I mean, but the big one that's I think left people feeling a little bit well betrayed in some cases is pensions are coming into the inheritance tax net. So I actually think most taxes in the UK, when you look around the EU, income tax isn't too, certainly no higher than most countries in the EU. Capital gains tax isn't too bad. It's not great. I think part of the problem has been that the allowances have just remained static for us for so long. So if it comes into a question of if the main tax is inheritance tax, which is often a big one, then it's the usual options of you can gift money. The best one is going out and spending money to get it off your books that way. That's more enjoyable. Gifting money. Trusts are used in the UK. You can gift money into a trust, and in the UK it takes 7 years for the money to be off your books, if you like, for inheritance tax. And there are certain investment types. AIM shares, so investments in traded, active companies. So there's an AIM exchange, and certain fund managers put together funds that qualify. So after ownership of those of 2 years, those shares or those funds are off your books for inheritance tax, but you still own them and have access to the money. It should be noted they are smaller companies, are certainly more volatile than mainstream shares. But there's a few options there. And then for normal things, coming back and the ISA allowance, £20,000 a year, but certainly a couple can get the 6-figure sum into ISAs in only a few years, and those are free of income taxes and capital gains. So there's actually quite a lot of options in the UK. The headline rates aren't really as bad as it's different if you come back from Dubai or Singapore or France or Spain. It's not going to be that earth-shattering.
That bad. Thank you. And maybe one for you, Matt. Are there penalties for moving money back to the UK, and can they be avoided?
From a currency perspective, I guess the only one would be obviously on the currency exchange. There's always going to be a charge for exchanging a foreign currency into sterling. But yeah, of course, that's why you speak to a brokerage to lessen that charge. But yeah, from any other perspective, I'm not entirely sure.
Anyone else to add to answer the question on penalties on moving money back into the UK?
No. But seen as a movement of capital, there's not a tax liability on that. There's no capital transfer taxes.
So one question, we'll do a quick round because I'm aware of time and the hour is nearly done. So there's one question that I will ask you one by one. It will have to be a quick answer. And the one question, let's start with John. What is the first thing I should do when I land on UK soil and before I buy a property? Apart from going to Greg's or something. Yeah, I wouldn't, but
before you buy a property, assuming it's property search related, once you've picked the locations, connect with the local agents and get on first name terms with them so that you can get an understanding of the market and a quick check on the hottest properties that are out there, both on and off the market. Get to know the people that are active in that marketplace. I'd say one top tip for those that once you have found a property and you've moved in, you need to register with a doctor if you want access to the NHS, and that can take about 3 to 10 days to register with a GP, which is about the same amount of time it takes to get a doctor's appointment. So there you go, before and after you've found.
Thank you very much. Matt, I landed in the UK. What's the first thing I should be doing?
Well, this has actually been quite a good webinar for me. I'm purchasing a property at the moment, so it's good to hear all the different perspectives. But no, from a currency perspective, I mean, if you are an international buyer landing in the UK and getting a budget together in sterling, think about the currency, but don't budget off what the interbank level is. So obviously, the interbank level is what you search up online, and you can see what the currencies are worth. But give yourself a bit more breathing room than that, because there will be a charge on top of the rate that you can see on there. So make sure you have a wider budget than what you can see online, because obviously the currency is subject to change as well. Yeah, I think that's a pretty good way of thinking about it from that perspective.
Thank you. Chris?
Speak to your mortgage broker, of course. But no, we can help you just kind of navigate sort of, again, borrowing amount, what's available, how you should be like setting up credit, banking. Do you need to bring funds over? Like how you should be, if you're self-employed, how you should be paying yourself when you come to the UK, how much money you need to bring over for a deposit. And again, just pointing you in the right direction for different specialists to again help you find the right property, get the right advice on all the different areas. So yeah, that would be my recommendation.
Thank you. Jonathan?
I would say take your time. Buying and moving home, particularly internationally, is a marathon, not a sprint. Take time to look around areas, talk to people, make sure there's alignment to the life you want to lead. Look at lots of property and sense test that you've definitely got it right, because getting it horribly wrong becomes a very expensive hobby.
Yeah, I think taking your time, getting to know the area as well, because it's one thing to go on holiday somewhere and living in that place. So definitely taking your time and making the right choice. Nick?
Hi, yeah, I think that, well, there used to be a form. I think people often think, what do I do as soon as I get back, to tell HMRC or something like that? It's a bit dry, but actually you don't do that anymore. It's a bit admin related. You just have to get, change of address is done, the usual chicken and egg thing of needing a bit of ID, proving your address to change your address, and who's the first one to give it to you? It's usually the bank, and then and do the rounds there, and that gets you back into the UK. Sort of formally, from a tax residency point of view, will be just changing your paperwork to match your physical location, and then follow up on, hopefully there've been live discussions in the run up to moving back, and start to put the funds into place. Most of the things that we would do in speaking to them for 6 or 12 months, actually you wouldn't actually act on them until you're physically back in the UK and resident anyway.
So I think to recap, one thing is to make sure that also you talk to the people who know about that have their own expertise. So if you're looking for a mortgage, talk to a mortgage advisor. If you're looking for property, talk to your buying agent or to the local estate agents. I like, John, your advice of making friends with the local estate agents, because they will know everyone in the area. Joking about, they will know the best pubs and restaurants, they will know the best places to do whatever you like doing, if it's walking, if it's going out, if it's going to the cinema. They know their area, and they will be able to help you and give you an insight into the life within that area as well. People like Jonathan and your buying agent are perfect for that as well. And it is a big move, and talking to the experts who can look after you and have your best interest is so important. Thank you. Is there anything that anyone would like to add? We have a minute before I wrap up. No? Fantastic. Well, thank you so much for all your expertise. As I said, there are some questions that we haven't managed to go through, so we will send those questions to each expert and they will come back to you. For those people who didn't manage to watch the webinar live, we will be sharing as well the recording. And for those of you who are here but would like to watch it again, we will be sending the recording as well. I hope that you've all enjoyed the webinar. Thank you for attending, and I hope to see you soon. Thank you very much, everyone.
Thanks, Emily. Thank you.
Bye.